Welcome to Financense, where we decode the financial mysteries behind today's most intriguing companies. In this video, we'll unravel the enigma that is TikTok's profitability. With over 1 billion monthly active users, TikTok has become the second most popular social media platform worldwide, trailing only behind Meta. But here's the catch. Despite its massive popularity, TikTok is burning through billions of dollars annually. Join us as we explore why TikTok, the unstoppable behemoth of social media, is struggling to turn its colossal user base into a profitable business. TikTok is owned by the tech giant ByteDance, which operates two nearly identical apps, Douyin in China and TikTok internationally. While these platforms may look alike, they operate under different rules due to varying censorship and legal requirements. However, despite their differences, TikTok's financial struggles are consistent across regions. TikTok's financial statement, or lack thereof, has remained a closely guarded secret due to ByteDance's private status. Nevertheless, we can glean some insights from TikTok's European operations, represented by a subsidiary named TikTok UK. In 2021, TikTok UK generated approximately $1 billion in revenue. Impressive, right? Not quite. The catch is that TikTok's profitability metrics were in dire straits, with a cost of goods sold matching its revenue, leading to an operating loss of a staggering $900 million. But why is TikTok, a platform with 138 million annual users in Europe alone, struggling to make ends meet? Like most social media platforms, TikTok relies heavily on advertising as its primary source of revenue. As you scroll through your TikTok feed, you'll notice advertisements seamlessly blended with user-generated content. In 2021, TikTok made approximately $7 per user in Europe, while Meta, the parent company of Facebook and Instagram, raked in nearly $65 per user in the same region. So what's the problem? It's not a lack of user engagement. The average TikTok user spends 1.5 hours daily on the app. The issue lies in TikTok's struggle to deliver a compelling return on investment for advertisers. To shed light on TikTok's advertising efficiency, a digital advertising firm conducted an experiment in 2022. They ran short-form video ads across TikTok, YouTube Shorts, Pinterest, and Instagram Reels, allocating a few $100s to each platform. While TikTok offered the lowest cost per 1,000 impressions, it lagged behind in converting viewers into landing page visits. TikTok's challenge lies in encouraging users to take action beyond simply viewing ads. A unique aspect of TikTok's advertising landscape is that many brands promote themselves organically by creating humorous TikTok videos and capitalizing on trending content. These videos can quickly go viral, accumulating millions of views without any paid marketing. The organic reach of TikTok poses a conundrum. If brands are already getting millions of views without spending, why would they invest in paid advertising? TikTok's difficulty in converting ad impressions into sales may stem from the nature of short-form video content. Unlike YouTube, which often hosts educational content, TikTok and Instagram Reels primarily feature entertaining and quick-hitting videos that captivate users. However, this engagement can hinder users' willingness to leave the platform to make a purchase. Meta, the company behind Facebook and Instagram, introduced Instagram Reels in 2020 as a direct competitor to TikTok. Although Reels has gained significant viewership, Meta has shifted its focus away from Reels recently. They aim to redirect users to their core platforms, where they are less engaged, creating a more favorable environment for advertisers. This divergence underscores the challenge of monetizing short-form video content. Recognizing the limitations of advertising, TikTok is exploring alternative revenue streams. While TikTok is losing money, ByteDance, its parent company, is highly profitable, reportedly making over $20 billion in 2022. This financial success can be attributed to the profitability of Douyin, the Chinese counterpart of TikTok. Douyin diversifies its revenue streams by incorporating live streaming and e-commerce features. Influencers on Douyin can live stream, accept virtual tips from fans, and sell products directly to their followers. The seamless integration of these features within the platform makes it an appealing destination for both influencers and consumers. To replicate this success, TikTok has set its sights on Southeast Asia, culturally akin to China. In 2022, TikTok generated $4.4 billion in gross merchandise value, GMV, in the region, marking a 300% growth rate from the previous year. However, this growth comes at a cost, as TikTok subsidizes shipping costs due to its reliance on third-party logistics companies. As TikTok strives to find its financial footing in Southeast Asia, it faces formidable competition from established players like Shopee and Lazada. These e-commerce giants have invested heavily in building their logistics networks, which allows them to reduce operational costs significantly. By owning warehouses and employing their own delivery drivers, they've gained a competitive edge that TikTok currently lacks. To combat this disadvantage, TikTok has pledged to invest billions of dollars into the Southeast Asian region. While this commitment shows TikTok's determination to make inroads, the road to profitability is anything but smooth. The costs associated with outsourcing logistics to third-party companies continue to weigh on TikTok's bottom line. Moreover, TikTok's foray into Southeast Asia might not be the panacea they hope for. Although the cultural similarities between Southeast Asia and China present an advantage, it's essential to consider the nuances of the market. Consumer behavior, preferences, and shopping habits can differ significantly, making it challenging to replicate the success TikTok's parent company enjoys in its home country. As TikTok navigates these complexities, they must remain agile and adaptable. The ever-evolving nature of the tech industry demands constant innovation and strategic thinking. Finding a winning formula for profitability is a puzzle that TikTok's leadership must solve, and it won't be easy. In conclusion, TikTok's journey to profitability is a tale of ambition, innovation, and fierce competition. While they've achieved remarkable growth in terms of user engagement and revenue, the path to sustainable profitability remains elusive. TikTok's unique blend of short-form content and entertainment-driven user behavior presents both opportunities and challenges. As investors and advertisers closely monitor TikTok's progress, they understand the importance of cracking the code for short-form video monetization. Whether TikTok can successfully translate its colossal user base into a profitable venture, or if it will follow in the footsteps of its parent company ByteDance, remains a captivating story in the world of tech and social media. In conclusion, the mystery of TikTok's profitability is a complex puzzle. While it grapples with the challenges of short-form advertising and struggles to provide a convincing ROI to advertisers, TikTok is diversifying its revenue streams and venturing into new markets. Whether TikTok can recreate the financial success of its parent company remains uncertain. What are your thoughts on TikTok's financial conundrum? Share your insights in the comments below. Thank you for watching Financense, your source for in-depth financial analysis. Don't forget to like this video and subscribe for more captivating content. Like our content, subscribe to Financense for more in-depth analysis of the business world's biggest mysteries. Stay informed and stay ahead. See you in the next video.